Welcome back to the Financial Freedom Show. My name is Rob Berger, and today we're talking about Bitcoin. I guess it's all the rage now, and a number of folks in comments to other videos have asked me, my view of Bitcoin. Do I think it's a good investment? Do I invest in it? So what I thought I'd do is I want to walk through, let me first tell you what I'm not going to do. I'm not going to try to convince you that Bitcoin is a bad investment. That's certainly, my view has been that Bitcoin is, I won't call it a bad investment. It's the type of investment that I just would never undertake. And that's true even as the price of it seems to go sky high. But my goal in this video is not to convince you that Bitcoin is good or bad, that you should or shouldn't invest in it. Instead, what I want to do is walk through 9 things that I think you should consider, questions you should ask yourself, if you will, if you're either thinking about investing in Bitcoin, or for that matter, some other cryptocurrency, or if you own Bitcoin and you're wondering, is that a smart thing? Should I keep it? So that's my goal in this video. It's not to try to push my views on anyone, although they'll come through in the video. I can't help that. But I think Bitcoin right now, if nothing else, should be a wonderful learning experience for every investor, whether you're invested in it or not. Because I think it can teach us a lot about investing in general, and more importantly, our own specific approach to investing. And there's certainly more than one approach. All right, enough chit chat. Let's get to it. I've got 9 things. They're all important, I think, or I wouldn't have included them, but I'm going to start with number 9 and then kind of work down to what I think is the single most important question you should ask yourself if you're going to invest in Bitcoin. All right, number 9. As you may know, Bitcoin is capped at 21 million. They're not going to, they call it mining Bitcoin, right? They're not going to mine more than 21 million. And so a lot of folks, you see that as a sort of a plus for Bitcoin, right? It can't be inflated. Like dollars, the government, as we know, the Treasury seems to just print billions and trillions of dollars at the drop of a hat. Well, Bitcoin can't do that. Governments can't get a hold of Bitcoin and start printing more of it or mining more of it. And so a lot of folks, see that as a big advantage to Bitcoin and a driver behind its recent price increase. And by the way, I'm recording this on January 6th, and as you can see on the screen, according to Google, the current price is over $34,000. Now, the thing about a cap on Bitcoin, there's 2 things to keep in mind. One, it's absolutely true. I don't think anyone debates the fact that Bitcoin is capped at 21 million. But the question is, so what? How does that help us determine a reasonable value or price for Bitcoin? How do we translate that 21 million cap into a value, right? And here, I want to stress something, that when assets are in bubble territory, when there's all this frenzy and excitement and asset prices are going up, folks will often justify that increase based on facts. They will use facts that very few people would dispute to justify the rapid rise in the price of an asset, even as, in hindsight, we realize it was not long after that it crashed. If you're old enough, if you're old like me, you remember the tech bubble, late 1990s into 2000. Folks were saying, look, this time is different. This time is different, probably the 4 most dangerous words in all of investing. And the argument was, look, this is a technological revolution. We've never in the history of the world have ever experienced anything like this. And that's why these prices have gone up and why it's justified. Now, factually, it's certainly true. We had not experienced that sort of technological advances, computer advances and so on, ever before, right? But that didn't justify asset prices that were divorced from the fundamentals of, in this case, in the tech bubble, the technology companies. We heard it during the rise in real estate prices, 2005, 6, 7, into the, of course, what we know now, the crash of, I guess, 07, 08. Where I heard this then, they're not making any more land. Just like they're not making, the Bitcoin is capped. Well, land turns out to be capped too, at least until we colonize the moon or Mars. And so that justified in some people's minds the crazy prices. And let me just take a side note. If you hear any noise behind me, it's because they're putting a new roof on our house. So hopefully it's not too distracting today. The point is, yes, Bitcoin is capped at 21 million. The question as a potential investor you have to ask is, so what? Other things are capped. In some cases with companies, they're actually reducing their outstanding shares. Now, yes, in theory, they could issue more, and that is different. But the question is, just because something is capped doesn't mean any price is justified. More importantly, how do you translate that fact, Bitcoin capped at 21 million, to a price? Does that justify its current price of 34,000? It was below 30,000 3 days ago. Was that price justified? That's the first question. Yes, Bitcoin's capped, but so what? Now, number 8, as we go down our list, is related to the fact that Bitcoin is capped. It gives it almost an air of its specialness. There's only 21 million Bitcoin, never any more. Well, that's true, but it's also kind of not true, right? Because as you well know, there are any number of cryptocurrencies, and in fact, we could create a duplicate to Bitcoin if we wanted to, right? And an infinite number of them, I suppose. I guess it would be limited to computing power. But in that sense, Bitcoin is absolutely not unique, and cryptocurrencies are absolutely not unlimited. Now, that doesn't become relevant in the current frenzy, right? Because Bitcoin was sort of the first to market, if you will. It's sort of the one cryptocurrency that all the traders have rallied around. And so in terms of just Bitcoin as I'll call it an investment store of value, some will say, the fact that it was first matters, right? But if we ever get to the point where it actually serves any functional use, it's actually not special. And it's not capped at 21 million in a meaningful way. Because if we're going to use it, and by it, now I mean cryptocurrencies, as a currency, we could have any number of currencies. And so the question becomes, how is Bitcoin as it's thought of today going to transition into something actually useful, perhaps as a currency, which it's clearly not at the moment, and how will other cryptocurrencies affect that transition? And that question, as important as I think it is, relates to number 7 as we work down, and that is Bitcoin's competition. Now, I'm showing you on the screen the value, as I mentioned, just over 34,000. I want to actually look at the value of a different cryptocurrency, and that is Litecoin. Now, actually, before I show you the value, just like Bitcoin, Litecoin is capped, but it's not capped at 21 million, it's capped at 84 million, so 4 times as many. So if the cap is so important, and it makes sense that it would be, you might expect Litecoin to be worth about 25% of Bitcoin, right? So I'm trying to do the math here, what we're talking about, 8 or 9 grand. Now, you could say, yeah, but Bitcoin was first, so maybe there's a premium there, so okay, what, maybe 7 grand, whatever. Well, let's go look at Litecoin. Pull it up here. Here it is. Oh, $164. That raises a question in my mind, and that is, why is there such a disparity between these prices? Yes, I get that Bitcoin is first, but if there's any sort of reality behind the current price of Bitcoin, why is Litecoin trading at $164? Now, some would say, well, Litecoin is undervalued, although the market apparently doesn't believe that, because it's certainly not bidding it up in any significant way. It's certainly not to approach 25% of the value of Bitcoin. I think some would say, well, that goes back to Bitcoin being the first, and something that's called the network effect. Now, I'm going to address the network effect in a minute. We'll talk about it. And certainly there could be some truth there, but it still raises the question that I think every Bitcoin investor should ask, and that is, has the current price sort of been divorced from reality? And why is it so much more expensive than another cryptocurrency that's also capped? And if capping the cryptocurrency is a meaningful driver of Bitcoin's current price, why isn't it also a meaningful driver for other cryptocurrencies that can function in very similar, if not nearly identical ways that are also capped? Again, it's a question I would be asking myself if I were giving serious consideration to investing in Bitcoin. All right, number 6. And this goes to this time is different. I have a good friend who's into crypto. He actually started a crypto mining company. He was mining, I think, Bitcoin, I think Ethereum, and he had it set up, had locations, dealing with all the electricity requirements, keeping the space cooled. And this was back in 16, 17, I believe. And of course, when the bottom fell out of the Bitcoin market and other cryptocurrencies, he kind of shut all that down. Today, he told me he's got, I think, 6 Bitcoin. So that's what, 100 and, I don't know, close to 200 grand, I guess, in Bitcoin. And when I asked him about it, he said, well, this time is different. We were texting, so I sort of texted back a smiley face. Actually, it was a laughing face with tears anyway. But the reason it's different, he said, is because now there are institutional investors. Now, remember what I said about the 21 million cap. When an asset gets into bubble territory, people will justify the price with facts. This is another example. It's absolutely true that institutions are moving into Bitcoin. And I can come up with a couple of examples. MicroStrategy is one. It's a publicly traded company that sells software. Michael Saylor, I think is his name, is the founder. Hope I've got that name right. And his company moved about, I think it was about $500 million into Bitcoin earlier this year, and reported that on their third quarter their third quarter 10Q. And then since then they've borrowed, I want to say it's $650 million, and plowed another roughly $500 million into Bitcoin. But in any event, I think they have over $1 billion in Bitcoin. Square, which owns Cash App, they invested, it was $50 million, so a relatively small amount, not to you and me, but for companies, into Bitcoin. Of course, they make money selling Bitcoin to investors, so in some ways, I think it was as much a marketing play as anything else. But there are other institutional investors that have moved into Bitcoin, and there's no question that when that happens, at least temporarily, price is going to go up. You've got more buyers, and you've got big buyers, right? The question, though, that I think as an investor is this: does the involvement of institutional investors protect an asset from crashing or increase its usefulness? If you think about stocks and bonds, there have been institutional investors involved in those assets for forever, and they can still crash. I mean, look at Berkshire Hathaway. Talk about institutional investors. I mean, just Warren Buffett alone owns a fortune. And yet, in its history, it's gone down by 50% a couple of times. And it's got actual operating companies underpinning the stock. It's got something tangible, right? So yes, institutional investors have moved into Bitcoin. That's a fact. The question you have to ask as an investor is, does it justify the current price? Now, again, in my mind, it does not, but that's ultimately a decision you have to make. But don't assume that just because institutional investors are now in, that one, it changes the underlying value of the asset. It doesn't. Or that it justifies its current price. I don't believe that it does. But again, I just give you the question to ask. I think it's an important one. I wouldn't fall in love with the fact that institutional investors have joined the party. I would add, by the way, that institutions are some of the worst investors you'll ever find. So I guess time will tell. All right, number 5. Monetary policy. You hear this a lot. The government is borrowing a ton of money. It's just ramped up even more because of COVID. That has increased inflation, they'll say. Now, folks will note it doesn't increase the cost of milk and bread for the most part. The consumer price index is still under 2% increase a year, very modest. But it increases asset prices. Some will call it asset inflation. Now, that's true generally. That's true of anything. When interest rates go down, the value of assets go up. And there's reasons for that. But one practical sort of non-math reason for it is when you can't get any money on your bonds or savings, what do? Well, you go invest in stocks and other assets that are paying a higher yield and have an opportunity to go up in value. If tomorrow we snapped our fingers and the 10-year Treasury was paying 5%, you would see a big reversal of that in a hurry. So again, it's another fact that Bitcoin bulls will focus on, and it's a true fact, right? It's a true fact. But the question is, does that justify the current price of Bitcoin? 1, and 2, what happens when it reverses? The funny thing is that yes, interest rates going down increase, say, for example, the value of stocks, but maybe they also increase the value of Bitcoin, right? I mean, don't all assets benefit from values benefit from dropping interest rates? I think so. Real estate, stocks, doesn't matter. And so will that reverse? I think it will. I don't know when. That's an interesting question. What will trigger inflation? Could it be more government spending that puts more money in individuals' pockets, which causes them to spend, which increases prices? Could it be the dropping value of the dollar, which increases on a dollar basis things like oil? When that price goes up, it increases the price of just about everything? I don't know. But I do know that eventually interest rates will go back up, and that will affect the price of I think, all assets. So monetary policy, yes, it's I think an interesting time right now with our government. And what will happen to our debt when interest rates go up, that might not be a pretty picture. But again, how do you take that fact and translate it into a meaningful price for Bitcoin or any other cryptocurrency? I think it's an extremely difficult, if not impossible thing to do. In fact, I think as an investor, the most important answer and the most frequent answer we can give to all of the questions we ask, won't be all the time, but many cases, is I don't know. An investor has to understand the limits of their knowledge, and I think this is a perfect example of that. But in any event, that's number 5. All right, number 4 is, of course, volatility. We all know that Bitcoin is incredibly volatile. I'm looking again at the price here of Bitcoin just in the last month. I mean, a month ago, it was trading at under 20,000. Now it's over 34. And if we expand out and look at a year, I mean, earlier this year, it was a low of about 5,000. So yes, Bitcoin is extremely volatile. And there are 2 questions you need to ask yourself. The first, I think, obvious question is, can you handle the volatility? Can you hold on to Bitcoin even if it drops by 50%? How will that affect you, I think, psychologically? How will it affect your portfolio? You need to understand what you're getting into. That's the first question. But I think the second question is maybe more fundamental, and that is, what does the volatility tell us about Bitcoin as an asset in the first place? I mean, normally when an asset is valued based on some sort of underlying fundamental usefulness, it certainly has some volatility, but nothing like what we're seeing in Bitcoin. And it raises the question as to whether Bitcoin, his current price, is completely divorced from reality. Now, as an investor, in Bitcoin, not me, but just investors generally, they may look at this volatility and say, look, volatility is great. I've made a fortune this year. And if you've made a lot of money in Bitcoin, I understand that. But certainly new investors, or if you're relatively new to Bitcoin, or if you're thinking about it, it's a question you should ask and try to come to an answer for yourself. I personally think the current price of Bitcoin is divorced from any reality at all. Now, that doesn't mean it won't go higher. I mean, it's amazing what we can convince ourselves to do as a collective. That's why there are asset bubbles. That's why things get priced in a way that just simply isn't related to reality. But eventually, as we know, it won't end well. But again, that's a question you have to answer for yourself. But I mentioned it. I think it's an important one to ask. All right, number 3, we mentioned the network effect. I want to talk about that for a minute, because I've heard a lot of people say, Bitcoin the price is going up because of the network effect. And that's why, for example, they would argue Bitcoin's at 34,000 and Litecoin, which is also capped, but it's only at 166. It wasn't the first cryptocurrency. It didn't benefit from the network effect, and Bitcoin has. So what's the network effect? Well, it's pretty simple. It's simply that it's the notion that something becomes more useful as more people adopt it. That's it. Pretty simple. An example would be a messaging app. I could create the best messaging app ever, and if only 3 people used it, it wouldn't be that useful, right? You need more people to buy in. You can think of social media platforms. I mean, how useful would Instagram be if there were only 4 users, right? Not very useful. And so because of that, when you're dealing with an asset that needs the network effect to be valuable, to be useful, the first to market really has a huge advantage, because they get more and more users, it becomes more and more valuable over time, and it becomes very difficult for some other competitor to unseat the first to arrive, right? The problem is that with Bitcoin, I don't think the network effect applies at all. Now, if it were used as a currency, certainly you need people to adopt it, right? It wouldn't be useful if you took your Bitcoin down to the grocery store and tried to buy milk and bread and they wouldn't take Bitcoin. Well, of course, they won't take Bitcoin now, but that's okay. From an investor's perspective, I think one would argue, because people aren't buying Bitcoin because it's a currency. That's not why they're buying it right now. Yes, there are a few things you can buy with Bitcoin, but by and large, you can't. But that's not why people are buying it. So that doesn't really apply right now. And then the question becomes, well, why then does Bitcoin become more useful now just as an investment, just because more people are buying it? Now, what some would say is, well, it's a store of value. Gold used to be the store of value. Bitcoin is now the digital gold. But I would argue that's not the network effect, right? I mean, has anyone ever applied the network effect to gold? Not that I know of. Gold doesn't become more useful just because more people buy it. It becomes more expensive. That's true. And that's exactly what's happened to Bitcoin. But Bitcoin as a store of value, to me, is not the network effect. Bitcoin is not more useful as a store of value, if you will, or a investment to just buy it and hold on to it, just because more people are buying and holding on to it. I would also add that as a store of value, gold has been a horrific investment long term. It's been a terrible investment. Now, Bitcoin, because it's the new thing and it's digital and it's different, has benefited from that newness, right? The question you have to ask is that really related to its underlying value? And do you think it will continue in that way? I personally don't. I don't think the network effect applies to Bitcoin at all, at least not in the context that people are talking about it now. Obviously, you need to make your own decision on that question for yourself. All right, number two, you need to think about what type of investor you are. There are three. I think just about every investment and investor falls into one of three categories. The first is sort of the buy and hold mutual fund, ETF, buy the market investor. That's 85% of our portfolio is that. We use index funds. You could use actively managed funds. But the point is, you're not trying to analyze a company and buy it when it's down or catch the next wave of growth company. You just basically, you're buying the entire market. You're probably dollar cost averaging into your 401k or whatever. That's the kind of investor that you are. The second kind, and this is about 15% of our portfolio, is a value investor. That's someone that says, look, I want to try to understand based on fundamental analysis in the case of companies, of financial statements and the like, what its intrinsic value is. Forget what the price that people are paying right now, but what is its intrinsic value? That is to say, what's the value that can be justified based on the operating performance of the company? And if I can buy it for less than that, or maybe close to that, if it's a great company, I'll invest. That's value investing. And then the third kind is what I call, some people call them speculators. I prefer price investors. So you're more focused on the price, not the underlying value. A good example of this would be short-term options trading. If you're trying to, you can buy options as a form of insurance against maybe other positions. But if you're just buying to make money, you're buying, selling calls, puts, whatever, to make money, you're a price investor. You're banking on the price of, say, a stock going up or down in a relatively short period of time. And if you're a gold investor, same way, right? I mean, there's no fundamental usefulness. Well, there's some usefulness for gold, but I mean, you buy gold, it just sits there. You're not earning interest. It's not undertaking operations to generate cash flow. So you're just banking on the price going up. Same thing with Bitcoin. You are a price investor. Now, it's not an approach to investing that I've ever taken, at least not in any meaningful way, and it's not one that I believe one can be successful in the long term. You may disagree. But I think the important takeaway here is you need to think about what kind of investor you are and want to be. Now, again, in my case, I'm a little bit of two types, right? The mutual fund, buy and hold, buy the market investor, and a value investor. So you don't have to just be one kind. And, part of some folks will say, I kind of believe in the future of Bitcoin. So I'm going to put 1 or 2% of my portfolio in Bitcoin or some other cryptocurrency. It's going to give me some diversity and exposure to that asset. That's my friend Joe. That's what he's done. And I would certainly not raise any objection to that. It's not an approach I've taken. But I think, that might be one approach. But at least, you understand why you're doing it. You understand what kind of investor you are. You understand the place it holds in your portfolio. And that might be okay. Now, some, by the way, are no, like MicroStrategies, they're all in. They've bet the company, as far as I can tell, or a big significant portion of the company on Bitcoin. They're not just allocating a couple percent, they got over $1 billion. And there are some individuals that have done the same thing. By the way, they do that with other investments. There are Tesla millionaires out there who've made a couple of $1 million on Tesla. And rather than cashing that in and living a life that maybe a year ago they would have never dreamed of, they're hanging on. They're like all in, right? And that gets me to the number one thing that I think every Bitcoin investor needs to ask himself or herself, and it's this. What will happen to me if the investment crashes? If tomorrow Bitcoin is trading at $1,000, what happens? We know what happens to your investment. It goes from 34,000 to 1,000 or whatever it drops to. But what's going to happen to you? What's going to happen to your portfolio? What's going to happen to your life? Now, if you've got 1 or 2% in your portfolio, probably nothing, right? I'm guessing. You might not be happy about it, but you're going to be okay. If that happens, MicroStrategies could be in trouble. I mean, they got $1 billion, more than $1 billion in Bitcoin. They've borrowed over $500 million. If Bitcoin crashes, I don't know what the impact on MicroStrategies would be, but I'm guessing it's going to be significant. I never want to put myself in that position. That's true of any asset, but that's certainly true of an asset like Bitcoin that has no fundamental underlying value. You buy the Bitcoin and it just sits there. All right. So there you go. Those are my 9 questions that I think every Bitcoin investor or someone considering investing in Bitcoin should consider. Feel free to tell me why I'm wrong in the comments. Just please be kind. And if you have any questions, leave them in the comments below. I'll do my best to help you any way I can. And until next time, remember, the best thing money can buy is financial freedom.